If someone walked up to you right now and said, "I'll give you $500,000 when you die, but you have to pick the right policy today or your family gets nothing," do you know which one you'd choose? Because most people don't. And honestly, that's not their fault. The insurance world loves making this confusing. But today, we're ending the confusion. For good. I'm Jessica on the Legacy Money File, and today we are breaking down whole life versus IUL, what they are, how they grow your money, and which one actually fits your family's legacy plan. Let's get into it. Okay, let's start with whole life. And I want you to think of whole life insurance like buying a house, in cash. You pay a set premium every month. That premium doesn't change, ever. You have a death benefit that's locked in from day one. And inside that policy, there's something called cash value, and it grows at a guaranteed rate, typically 2 to 4%. Now here's what makes whole life special: the guarantees. The insurance company is promising you, in writing, that your cash value will grow. Doesn't matter if the stock market crashes. Doesn't matter if the economy tanks. Your money is protected. And because of that, whole life is the foundation of what we call infinite banking, the Rockefeller strategy. The wealthy have been using this for generations to borrow against their cash value, keep growing their policy, and essentially become their own bank. So whole life equals guaranteed growth, fixed premium, rock-solid foundation. Got it? Good. Now let's talk about IUL. IUL stands for Indexed Universal Life Insurance. And if whole life is a house you bought in cash, IUL is like a house that grows in value based on the market, but with a safety net under it. Here's how it works. Your cash value inside an IUL is linked to a market index, like the S&P 500. When the market goes up, you participate in those gains, usually up to a cap, somewhere between 10 and 12% depending on your policy. But here's the part that's different from just investing. When the market goes down, you don't lose. Your floor is zero. You just don't gain. You don't lose. So with IUL, you get flexibility. Your premiums can flex. Your death benefit can flex. And your cash value has the potential to grow faster than whole life over time because it's tied to market performance. But with that potential comes a trade-off. There are no guarantees. It's possible, not promised. Now let's put them side by side. This is the part y'all came for. Whole life has a fixed premium. IUL has a flexible premium. Whole life has a guaranteed death benefit. IUL has a flexible and adjustable death benefit. Whole life cash value grows at a guaranteed 2 to 3%. IUL cash value is market-linked and can grow from 0 to 12% or more. Whole life carries very low risk. IUL carries moderate risk. Whole life offers high loan flexibility. IUL offers very high loan flexibility. Now I want to focus on cash value, because this is where people get confused the most. Whole life grows at a guaranteed rate, slow and steady. IUL grows based on the index, so in a good year you might see 10, 11, 12%. In a flat year you might see 0, but never negative. Over 20 or 30 years, IUL can potentially build more cash value, but whole life will always be more predictable. Let me give you a real example. Say you're 35, non-smoker, healthy. You put $400 a month into a whole life policy. In 20 years, your guaranteed cash value might be around $80,000 to $100,000. Guaranteed. That's your floor. Now put that same $400 into an IUL. If the market performs well, and historically the S&P has averaged about 7% annually, your projected cash value could be significantly higher. Some illustrations show $150,000 to $200,000 or more over that same period. But, and this is important, those are projections, not promises. That's the difference. So if you are risk-averse, you want certainty, you want something you can sleep on, whole life is your friend. If you're comfortable with some uncertainty in exchange for higher growth potential, IUL might be your lane. Whole life is perfect for you if you want a guaranteed death benefit and guaranteed cash value growth. If you plan to use the infinite banking or Rockefeller strategy. If you are more conservative with your money. If you want to use it as collateral, it's accepted by banks as an asset. If you want to pass down a predictable, reliable policy to your children. Think grandparents building a legacy policy for grandchildren. Think business owners who want stable collateral. Think anyone who says, I want guaranteed, period. IUL is the right move if you want life insurance and a vehicle for tax-free retirement income. If you're okay with some variability in exchange for higher growth potential. If you want flexibility to adjust premiums and change coverage over time. If you're younger and have time on your side to ride market cycles. If you want to supplement your 401k or IRA with a tax-advantaged account. IUL is powerful for wealth building, but it requires the right design, meaning the right agent who knows how to structure it properly. A badly designed IUL can eat your cash value in fees. That's why who you work with matters. So here's my honest take. Neither one is universally better. They are different tools for different goals. If you want guaranteed protection and a banking strategy, whole life. If you want growth potential with protection and flexibility, IUL. And honestly, a lot of families benefit from both. One for the foundation, one for growth. But the most important thing is this. You have to get started. A policy you open today, even a small one, is building cash value while we're having this conversation. The best time to start was yesterday. The second best time is today. Drop compare in the comments and I will personally send you the free whole life versus IUL cheat sheet I created with a full breakdown so you can see which one fits your family. And if you're ready to sit down and actually build a policy, hit the link in my bio and let's book your free consultation. I'd be honored to be the one who helps you write the first chapter of your family's legacy. I'm Victoria on the Legacy Money File, where we turn financial literacy into generational wealth. Like this video if it helped you, subscribe so you never miss an episode, and I'll see you in the next one. God bless, and go build that legacy.